price. When Bitcoin rises, ARBK can soar even higher. But the risks are magnified too, and the swings can be dramatic. Their business model is straightforward: mine Bitcoin for less than it's worth on the open market. The biggest cost by far, electricity, which can make or break a mining operation. Cheap, reliable power is everything. Without it, profits disappear fast, and competition is fierce for the lowest energy rates. Argo's Texas facility aims to use renewables like wind and solar, which helps with costs and sustainability. But even with green energy, the business is still at the mercy of unpredictable crypto cycles. When Bitcoin soars, miners can practically print money, seeing profits multiply as the price climbs. But when Bitcoin crashes, those profits can evaporate overnight, leaving miners scrambling to cover costs. Argo's financials swing wildly from quarter to quarter, and they carry significant debt from rapid expansion, making them vulnerable during downturns. The recent Bitcoin halving slashed mining rewards in half, so only the most efficient miners with the best technology and lowest costs can survive in the long run. Argo even had to sell its flagship facility just to stay afloat, a major red flag for investors and a sign of how tough the industry can be. If you're bullish on Bitcoin, ARBK offers the potential for amplified returns. But remember, the risk is amplified too. You face not just Bitcoin price risk, but also operational risk, debt risk, and industry-wide risk from events like halvings and regulatory changes. For most investors, buying Bitcoin directly is simpler, more transparent, and less risky than owning a mining stock. ARBK is for those seeking high-stakes exposure and who can stomach extreme volatility and uncertainty in the crypto sector. If you want to play the mining game, know the risks, do your homework, and size your position accordingly to avoid outsized losses. Otherwise, stick to the underlying asset, Bitcoin itself, for a more straightforward investment. Crypto mining stocks are not for the faint of heart. They're a roller coaster ride, and you need a strong stomach to hold on. Now let's wrap up this segment with a look at a different kind of crypto project, Arpa chain, which brings its own unique approach to blockchain. The risk profile stays high, but the story and technology behind each project can be very different. Let's see if Arpa offers something different for investors and the crypto community. On to the final pick, one last project to consider in this fast-moving space. Crypto, but with a twist. Let's break it down and see what sets it apart. Here's what you need to know before diving in. Arpa chain is a blockchain project focused on privacy-preserving computation. It uses multi-party computation, MPC, to let multiple parties compute data together without revealing private info. The goal enables secure data sharing for finance, healthcare, and more, without sacrificing privacy. The RPA token